The British pound is under intense pressure as the UK is ready to walk away if they don't receive good terms for the new Brexit deal that they seek by the end of October. As well, we're going to cover what's going on with the EURUSD. We do have the ECB rate meeting coming up on Thursday. As well, we're going to take a look at other markets like the Aussie dollar, dollar CAD, and also dollar Swissie and dollar yen. This is our currency market update here at ATFX. Alright, so before we actually look into the charts, don't forget that we have the Investing Cube Premium Forex Trading course. It's content, about 4 hours of content, which gives you 2 complete strategies and a money management system. It's things that I've developed over the years and that I use myself when trading. You can get it all for free cost, and you'll find that, or for no cost, and you'll find the link to this on the description. You can also just go to Investing Cube and click on Learn to Trade Forex Trading course. As well, you find a few other things here that might interest you. Okay, let's take a look at the markets then. And this is the GBP versus the dollar. It's under intense pressure just because the UK is ready to walk away from our Brexit deal. As well as we can read here on the homepage of the Financial Times, the UK has a plan that, like they call it, the internal market bill that's going to override parts of the Northern Ireland Protocol. So they already have a protocol and agreement in regards to what's going to happen with Northern Ireland. However, what's happening here is that they're going to push through some internal market bill that's going to override what they already agreed with the EU. And this is something that could comes at a critical time where the UK really just needs a deal if they don't want to leave with no deal Brexit. So it's a critical time right now, and that's why the pound is sliding the way it is. Now, if you look at this market right now, because of all the news, yes, we are in the buy zone. We're just about 130, 151, but I wouldn't be buying here given the news. There's a high risk that we can slid below this buy zone and then just trade a little bit lower, and then suddenly we're down here revisiting this level, which is the 129.99 level, and then from here maybe the market would bounce. Now, if you did already trade here, then it's better just to keep the position. That's what I do. I keep the position until getting stopped out, especially when we're so close to the trend defining level. Remember that in the past, we talked about buying here, we talked about buying here, and all of that worked out. And because we tend to go with the trend and we tend to buy dips, and maybe it's going to work out here as well. Maybe people will forget about this and talk about something else. So that's why the short-term outlook remains the same now, but I think realistically this level is not going to hold, and then maybe people will be buying down here, and we can check this out over the next day or so and see what happens when we come down to these levels. All right, here's the euro versus the USD. As well, under intense pressure, you have the ECB rate meeting coming up as well on Thursday. What's happening here is actually that the euro has done so good and is gaining quite strongly. And last week, we had numbers for inflation in the euro area. Let me see if I can show you that. And those numbers, they were showing us that we have a deflation now in the euro area. So the headline number declined by 0.2% year on year. So prices are declining, and because of COVID-19, they're probably going to continue to decline. And we know that the ECB hates deflation, and that's why they done all this QE. And with the euro gaining, it's not going to be helpful, because what's going to happen is that it's going to just drive inflation lower. So people say that they're going to try to talk down the euro this week at their meeting, and maybe announce more QE that they're going to do. Maybe not already now, but it's effective just picking up the pace to try to get inflation expectations higher. And that is obviously something that could threaten the euro. Now, what's next here then? Should we buy? Should we sell? Well, we are at the buy spot. We had a nice little bounce from these levels, and I will just continue to be bullish here. But with the ECB rate meeting coming up on Thursday, obviously it's a high increase. There's a high risk that we have more volatility. All right, here's the dollar versus the Japanese yen, and we're within that little beautiful range. In the past we said look to sell here for this to come down, and it went well. And here I've been saying to sell, and I continue to be bearish. And I think it makes perfect sense to be bearish below 107.07. and for the price to go down to maybe 105.50 and then maybe 105.18. Take that level out. We'll take out this triple bottom, which is like a rectangle almost, and then we can slide all the way down to 103.29. The alternative is that we take out the high. This is also a good little setup if you happen to be bearish on stock markets. I did a special video on that. You'll find that in the bottom here. At the end of the video, you can go to it. And I talk about the NASDAQ moving upwards and also the German DAX and so on. But if you think, hold on, Alex, no, you're wrong here, I think the market is going to collapse, then maybe buying a bit of yen could be something. Aussie dollar versus the USD. So remember, we had a very good time here over the last couple of months. We've been seeing buy and buy and buy. It's always gone up. We always reach our take profit levels. And now we're back at the stop level, or sorry, at the entry level, and the market is bottoming out there as I wanted to. When we were here, I said maybe down here, and so far all good, and so far I'll continue to remain bullish. And here's the NASDAQ 100, sorry, the New Zealand dollar, which is coming down a bit, and I think maybe down here people might look to buy, but we're not there just yet. Finally, dollar CAD, the idea was to sell here. That went well. And the market went up and then down, and as long as you're below 132.50, I'll continue to be bearish. Finally, dollar Swissy. This is something you can keep an eye on. If you actually happen to be really bullish on the dollar, then a break to 91.17 might be it. It's I wouldn't really call it like well, it's a bit like definitely sideways. Is it a rectangle? No, it's not, but it's some sort of sideways price action. And it wouldn't be unrealistic that if we take out something like 91.71, that we can probably go all the way up to 93.23. So I will keep an eye on that. Break here can take us much, much higher. And that, guys, concludes today's market update. If you do have any questions for me, you can just put them here in the comment section below here on YouTube. You can also reach out to maybe 𝗿𝗵𝗃𝗲𝗃 as well. Don't forget to check out our premium course and to subscribe to this video if you haven't done, or subscribe to this channel if you haven't done so already. Have a great day and a good trading week. Bye-bye.